Good morning, everyone. Welcome to our edexcel support YouTube channel. So today we are going to start A2 level IL examination. So the first lesson will be the break-even analysis. So I'm going to start this lesson. So nearly there are 10 chapters here we discussed. So I hope you will join and get something for your knowledge through this lesson series. So the first lesson is break-even analysis. So I will share the screen first. Okay. So first of all, we will talk about the break-even analysis and the break-even point. So the break-even is a point is a place where the total cost is equal to total revenue. The company earns neither profit nor loss in this point. Every company normally they have to face this situation at the beginning years, so they have to experience losses. So that means their revenue is lower than their expenses. So expenses are very high. So therefore, you have to experience a loss in that point. But after sometimes, this company this company may uh, earns neither profit nor loss. That means the total expenses and the total revenue is equal. So, so you won't get even a profit or loss in this point. So this point is known as the break-even point. So after that, company may starts to earn profit because their total revenue will be higher than the total cost. So with that idea, we will go to the next slide and see how we can represent this in a break-even chart. You can see here the break-even chart. So there are two axes in every graph. So this is y-axis and this is x-axis. So x-axis represent the number of units produced and the y-axis represent the cost or the revenue. Now through a graph, also we can identify the break-even output and break-even point and break-even units. So now here, remember, you can draw the first thing you can draw here is the fixed cost line. It is fixed. It won't change according to the number of products you produced. So therefore, you can draw easily the fixed cost line. It's a fixed line like this. After that, if you can identify if imagine if it is a past paper question, if there is a way to calculate the break-even output, so you can calculate and mark that point here, and you can have a dotted line uh, uh, to get the break-even output, and you can have a dotted line to get the break-even value or the revenue by break-even value. Then after that, you must remember your fixed cost line your total cost line starts from here, because total cost equals the fixed cost plus uh, variable cost. Therefore, the fixed cost line starts from here. Let's go through that point we marked before. Okay, then we can start drawing the total revenue line starting from 0. Again, it goes through that point. And after these two lines are intersects, which is known as that point, we can say it's a break-even point. The next thing we must understand in break-even chart is the loss area and the profit area. So you can see here, if you draw a small line in this area, sometimes a bit difficult, but I'll try to draw a line. So this line, you can see, if you mark first, you meet the total revenue line. So the total revenue line, total revenue value will be like this here. But when you further go through this line, the total cost line you will meet. So you can find the total cost here, X and Y. So you can see total cost is higher than the total revenue. So you can easily you can understand. So your total cost is higher than the revenue. So it's a loss area up to here. So here break even point. Then if you draw a line in this area, first you meet total cost here, and then you meet if you draw a line total revenue here. So imagine if you draw a line like this. Sorry about this line, but first you meet total cost, then you meet total revenue. So automatically you can understand it is a profit for the business. Another important thing you must understand is that angle of incidence. This is like the area you mark like this, angle of incidence with past paper. Then the margin of safety, the next important thing to know. Now, margin of safety means, now imagine this is the existing output for the business and the break-even output for the business. So the difference between the existing output and the break-even output in units is known as margin of safety in units. So that's also important when we consider the break-even analysis curve or break-even chart. We move to the next slide. Next slide will tell you some important formulas that we need to know under this break-even analysis. The first formula you should know is the break-even output or break-even point units. Its formula is the fixed cost over contribution per unit. Fixed cost over contribution per unit. So you have to add all the fixed cost, then that should be divided by contribution per unit. So normally, how do you get the contribution per unit? It's given here. It's we have learned in AS level, but contribution per unit will be selling price minus variable cost. Selling price minus variable cost. So next one is the break-even point value. Now, from this formula, you have taken the break-even point units, and that should be multiplied by selling price. Selling price given in the sum, then you get the break-even point value. The next one is the margin of safety in units. As I mentioned before, the existing output, the current output or current production, okay, and so current output minus the break-even output is known as the margin of safety in units. So that's a formula for margin of safety in units. Then if you want to calculate the margin of safety in value, the third formula, using third formula, you get the margin of safety in units. That amount should be multiplied by the selling price. Always remember that when you get the value, then you must multiply by selling price. Then the profit formula will be total contribution minus fixed cost. Total contribution minus fixed cost. And another important formula is not given here, but it's everybody knows. Therefore, you know it. Revenue minus total cost is profit. So revenue minus total cost is profit. So this total cost represent the variable cost plus fixed cost. So from revenue, if you deduct fixed cost and the variable cost, then you get the profit. So both the formulas are accepted. Okay. We go to the next slide. The next slide tells you about advantages and disadvantages of break-even analysis. So we'll first discuss about, talk about advantages. And this is an easy method and easy to understand. So you are given a formula, so you can easily calculate these things and get an idea. And next one is helps to measure profit and loss at different level of production. So you will be able to understand the according number of products. Now you can see if you go to this, so different levels, you will be able to understand whether there's a profit, whether there's a loss. So with the amount you can understand. The help in decision making, you can make different decisions. Now when the company is earning loss say time, so what are we going to do to come to the break-even point, and then we start to earn profit, and how are we going to price the products? All these decisions you can make based on this. Disadvantage of break-even analysis, it is assumed that all output is sold. So normally it's practical, it's not correct, it's not happening. But in here we assume that all output, all production is sold, which is not correct. That depends on the accuracy and the quality of data used. Sometimes the data you collected and the quality of the data you collected, so it represents from the break-even chart. So if it is wrong, so it gives a complete wrong picture about the organization. Next one, time consuming to prepare. So it takes time. If you have many products, so it takes time to produce, prepare these things. Okay, with that, we go to the next slide. Actually, next slide tells you about past paper sum. So we will read some first. Maria Andrew will commence business selling sandals. The sandals will be produced in a workshop at the back of her shop by staff who will be paid for each pair of sandals produced. Maria will work in the shop selling the sandals to customers. She estimates the following figures for the first day of trading. So when you are going to do the sum, so you have to have some idea about the formulas. So most of the time they will ask you the break-even output. So therefore the break-even output formula will be fixed cost over contribution per unit. So we can, when we are reading, we can get an idea about the items given here. Material cost per, or if it is mentioned per something, per pair of sandals something, so that's 100% sure you must be knowing that's a variable cost. Then the labor cost per pair is a variable. Rent of premises, you must be knowing the rent is fixed cost. Insurance accounting fee, it's a fixed cost. Other fixed cost is also fixed cost. Then other items are given. Selling price is 20, and number of pairs of sandals to produce and sold per year, that's given 960. And assume there are 4 weeks in a month and 12 months in a year. So this information is very important. So to do this particular sum. So you are Maria's accountant, and Maria requires further information before starting the business. So when you look at this, the first question they ask is number of pairs of sandals that need to be sold in the year of break even. So 8 months allocated for this. So the first thing you must know about the formula here. So when they're asking you to calculate the break even output, so you know the formula will be fixed cost over contribution per unit. So already we discussed about this fixed cost over contribution per unit. So another thing when you are reading, it's remember number of pairs sales to sold in the year. So remember, it's very important. A lot of students, they don't read this part, and if it is sometimes they may ask for only month, maybe for year, it depends. So therefore it's important to read and calculate according to that particular time. That's very important point to know. So here it's given for 1 year. And now we will try to calculate the fixed cost first. When you are going to calculate the fixed cost, I'll take this side to get the fixed cost figures. So I have marked here some fixed cost. rent of premises per month is 310. So 310, the rent. So rent value will be 310 multiplied by 12. That's the rent, one fixed cost. Second one is insurance and accountancy fee, 396 per year. So I'll write insurance. So it's given for year, so we don't need to change anything. It's 396. Then the next fixed cost will be other fixed cost, £5 per week. So we write other fixed cost. So £5 per week. We have how many weeks per month? 4 weeks per month. But we need it for 12 months. So it should be multiplied by 12 into 4, 48. So 5 multiplied by, you can say 4 into 12, it's 48. So we can directly take 48. So this is the total fixed cost. So when you add it, we'll see what's the answer you get for the fixed cost from the marking scheme. Fixed cost is, you can see the same thing they had done, 4,356. So we will take the same figure, 4,356. So this is your fixed cost line. So now you have finished calculating fixed cost line. And now next step is to get the contribution per unit. So to get the contribution per unit, we should know selling price we need. So we'll calculate here contribution per unit equal selling price minus variable cost. So selling price will be, it's given here, where is it? It's 20. It's 20. Selling price is 20 minus variable cost. Now, what are the variable cost we have here? One is 3.25, one is 8.50, only two. So 3.525 plus 8.50, you have to add and take. Easy then, it will be 11.75. So your contribution per unit will be, when you deduct these two, you get 8.25. Okay, so now we know two figures. We will get it confirmed by looking at the marking scheme variable. Yes, 8.25. So then we apply this to the formula. The fixed cost will be 4,356 over our contribution per unit is 8.25. Then your break-even output will be, when you divide these two, you get 528. So answer will be 528 sandals, pairs of sandals. So that's the answer, mainly 528. It's not clear. I will erase this. Answer will be 528. Okay, the marking scheme answer you check. Okay, we got the same answer in the marking scheme, so that's correct. Okay, we go to the, we erase this because otherwise no space. But we'll remember that the answer is somewhere here. break-even output is 520. Okay, now the next question will be number of pair of sandals that need to be sold per week to break even. So how are we going to do this? So I'm sorry, we have already calculated the break-even output. That is 528. 528. So they're asking it for a 1 week. For a 1 week. So according to the question, for a year, we have how many weeks? 4 into 12, 42 weeks. So this is for 1 year. Therefore, this should be divided by 48. Then you get the break even for the per week. So your answer will be, see the marking scheme, it's 11 is the answer. So 11 units is the answer. So we write that it's 11 units or 11 pair of sandals. So we completed the second part of the question. Next one is the forecast profit for the year. So before that, we can erase this quickly. So when you are going to take the forecast profit, so you can use two formulas. It's based on the information you have in the sum. One is total contribution minus fixed cost, you get the profit. And the other one is revenue minus total cost. That means revenue minus fixed cost and the variable cost. So when you go to the marking scheme, you can understand they use the second one, revenue minus fixed cost and the variable cost. So first of all, we have to find the sales value. The sales value will be, or the revenue value will be, selling price is 20 and the number of products sold 960. What they did was multiply those two and got the revenue. Fixed cost already calculated in the first part, that's 4,356. And the variable cost, I think we have calculated the number of variable costs per unit or per sandals, that is 11.75, and it should be multiplied by the number of products. So then you get the total variable cost amount, and then you deduct this revenue from the revenue, you deduct these two costs. So then you get the profit of 3,564. So that's a profit for the organized business. I hope you understood that, and we are moving to the next slide. That's also another sum we are discussing here. So this is Sadipur Household Appliances Limited, produced kettles at its factory for the 6 month ended 31st December 2013. The following information is available. So its marking is very important here. Now the point, the things. Now the rent is a fixed thingy. Payment of workforce for rate of 3.60 per kettle, it's a variable, and material cost per kettle variable. Manager salary is a fixed. Delivery cost per kettle, it's variable. Other fixed cost is fixed. And remember the period, the production of kettle for 6 month period was 8,500. So you have produced and you assume it's selling amount. All output is sold, it's mentioned. So therefore all produced items will be sold. selling price is 14.95. So the first, remember the question I told you, always remember from the previous past paper question also, number of periods, 6 months period. That's important point where you go wrong. So therefore, please consider that 6 month period. And now you have to prepare all the questions for 6 month period. That's the most important thing you should know. The first question they ask is the break-even point in units. So very easy, the same way we did before. So what we do is uh, we uh, we calculate the fixed cost first. So when you're calculating the fixed cost, you identify these fixed cost mark here. The first fixed cost is 3,800. I will calculate that fixed cost part. Fixed cost, how do you calculate? The first fixed cost will be the rent. So 3,800 per quarter. Quarter means for 3 months, but we are doing it for 6 months. Therefore, 3,800 should be multiplied by 2. Okay, because only for 6 months. You don't multiply by 4 because this is they're not asking for 1 year. And the second one will be manager's salary. It's given for 1 month, so 1 month, but you have to get it for 5,700 multiplied by, since they're asking for 6 month period, it should be multiplied by 6. That's also done. Fixed part is done. Manager's salary done. Then the next part is the next fixed cost is the other fixed cost, that is 2,440 per month. 2,440 multiplied by 6. So this is other fixed cost, and this one is manager's salary, and the 3,800 thing was rent. So now we have calculated all the 3 fixed costs. Now add those 3 and then you get the total fixed cost. You need to calculate the break even. So we go and see the marking scheme. What is the total fixed cost? It will be 56,440. It will be 56,440. Then we are moving to calculate the variable cost. I will quickly erase this part. The variable cost will be the variable part. First one is 3.60. This one. Then the second variable will be 4.25. And third variable 4.25. And next one will be 0.25. 0.20, I'm sorry. So addition, this will be the variable cost per unit, 4.7 and 8.05 pounds. It's a variable cost per kettle. So now by using this, why do we need to calculate this? Because we need to calculate the contribution per unit. Contribution per unit is selling price minus variable cost. So now we know the variable cost, and selling price is 4.95 minus 8.05 we calculated. So you get 6.90, I hope, pounds as your contribution per unit. We go to marking scheme and see, yes, so total fixed cost 56,440 divided by 6.90. So your answer will be 8,180 units. The second question they ask is about margin of safety in not in units, in sales revenue. So first of all, we have to calculate the margin of safety in units. Now we know the break-even output. The break-even output is 8,180. So then existing output must have given it is 8,500. So 8,500 minus 8,180 is 320 units. That's a margin of safety in units. But the question asks about margin of safety in value. Therefore, that number of units multiplied by the selling price, 14.95. So which represent now answer the 4,784, that's the margin of safety value. So 4 marks allocated for that. Or let's the third part in the question is asking whether it's profit, whether it's a profit or loss for the business. So there are two formulas. One is total revenue minus total cost, that's mean fixed cost and the variable cost. Other one is total contribution minus fixed cost. But easy to plan, we can go for the revenue figure, or we go to revenue one first. That is revenue one is 8,500 multiplied by 14.95. That is 127,075. That's sales. Then you deduct the fixed cost. Already we calculate the fixed cost. It's 56,440. It's calculated, and the variable part is variable cost per unit. We calculated that was I think 8.05. 8.05, and it should be multiplied by the 8,500. Then you get 68,425. So when you deduct these two items, that mean the variable cost and the fixed cost from the revenue, so you get the answer 2,210 as your profit. Okay. So another two ways to calculate the profit will be the contribution minus fixed cost, and the other one is contribution into margin of safety. So remember all these formulas to calculate the profit based on the information given in the sum. Okay, that question is also we have finished discussing. That question. So we are moving to next one. Okay. So there are two questions here in this sum, in this session, in this slides given. One is 2018 October, and the other one is 2012 January from previous syllabus. But it's related to this even question. So answers are given. Now we have already discussed two questions. I hope you got a good idea. So please go through these questions and try to do by yourself. So with that, we'll be completing our first lesson in break-even analysis. Hope to meet you soon with lesson number 2. Have a nice day. Bye.